Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition. Our focus will be on the private sector lender Karur Vysya Bank's earnings. The company has reported a 35% rise in its net profit to the tune of 456 odd crore rupees versus a 338 crore rupees the bank had reported a year ago period. Also, the bank has reported the highest ever annual net profit of 1605 crores, and this is for FY24. The net interest income for Q4 has stood at 996 odd crores. That's a growth of 11.5% versus last year's of 893 odd crore rupees. Even on the asset quality side, we have seen that the gross non-performing assets, both on the gross and the net side, have seen a moderation, and which is a positive again on the bank too. Now, to discuss for us what really worked for the bank in this quarter and what's the outlook going forward, I'm now joined by the top management of the company. Mr. B. Ramesh Babu joins in. He's the MD and the CEO of Karur Vysya Bank. Warm welcome to you, sir, on Business Today Television. Thank you so much for speaking to us on this special edition. First up, if you could tell us, how have you assessed the earnings in Q4? Has it met your overall expectations with respect to various parameters that you've reported?
Thank you, Sakshi. Thanks for the call here and all. So it was a very wonderful, eventful year for the Karur Vysya Bank because there are many parameters which are decadal high. The advances growth is more than 10 years. If you can look at it, 11 years, it's highest and all. The return on assets, and which is at 1.63 for the whole year and 1.76 for the quarter. That is also one of the highest in the last 15 years if you look at it. And as you were mentioning, the asset quality, gross NPA and net NPA are also the lowest. So that way, in every front, if you look at it, we could do very well. This is on account of few factors, particularly the Q4, what we did, because the interest rates on the deposits have gone up, cost of deposit has gone up. What we thought, the low yielding assets, particularly in the corporate sector, whoever are there, we have consciously shed during the year, and around 1400 crores of these low yielding assets and another 200 crores which are actually weaker accounts, we have got out of that. So that way, if you look at our overall advances growth for the year, it comes to 16%. But if we add back the 2.5% which consciously we left, it is around 18.5. So which is, as I said, is a decadal high. So on three fronts, business growth, asset quality and profitability, the bank did extremely well in the whole year, and quarter four also was pretty good. That way, we can say it's quite eventful.
Okay, wonderful. So now looking forward, if you could tell us on the net interest income front, what is your expectation on FY25? What is the kind of growth? Can you do better than this?
Correct. So if you can look at our net interest income also, whole year we are able to maintain at 4.19. So which is far, far beyond compared to our peers if you maintain. So this we could do on account of two reasons. So one is the lower slippages, that way the quality of the portfolio has improved. And second thing is we have shifted and rebalanced towards commercial, which is a high yielding segment for us. So RAM also, if you look at it, our retail segment also has grown by 18%, commercial by 21%, and agriculture by 17%. We would like to continue the trajectory this way. So coming to the NIM, what you are asking, we feel that we will be able to maintain these 4% for next 1 or 2 quarters because the time deposit rates have more or less have been plateaued now. So that way there may not be much need for increasing further. But if the liquidity has a problem and all, if we are forced to raise the interest rates for the sake of liquidity, then there can be a dent in the NIM. Otherwise, we feel that next 2 quarters it may be 4%, but it will be too difficult for assessing post 2 quarters because after that, what the central bank takes a call, we do not know. If the trend continues, we'll be able to maintain. Otherwise, if there is a reduction in the rates by the central bank or the liquidity issues come up and all, so still we feel that we may be able to manage between 3.8 to 4. Otherwise, 4 will be a reasonable number. That's what we feel.
Okay, sustainable levels of 4% largely,
Yeah,
at least in the first
absolutely.
2 quarters, and then
Absolutely.
3.8 to 4% in case there are any changes from the Reserve
True.
Bank of India as far as the rates are concerned. All right,
True.
sir.
True.
So, as far as the loan growth is concerned, could you give us the guidance for FY25 since you're talking about all the division between your corporate and the retail and which has grown like this and you'd like to maintain it? What is the visibility?
Yeah, last year we have given an indication of 14%. And finally, if you can look at it, our overall growth is 16 and 2.5% we have consciously shed with that come to 18.5. But this year, what we thought, there are many unknowns are there as far as the liability is concerned, which is the main raw material for the loans. So we have guided the market around 14% overall growth minimum we'll be able to grow. But if the CASA as well as liabilities are available, we will continue the growth what all we have shown in the RAM segment this year too. So provided if you can get a proper mix of liabilities. But if the liabilities are coming at majority in the time deposits, there is no point in growing exponentially in the top line in the corporate segment because the margins will be around 1%. On that, you need to maintain the capital cost, you need to maintain credit cost, CRR, SLR, PSL. With all these things, with a thinner margin, it doesn't make any difference. So, as you know, money has no color. If we keep it here rather than low yielding and commercial at 10, 10.5, if you can keep it, that will be much better. But we will still rebalance the portfolio. That way, we feel that minimum of 14% plus we'll be able to do depending upon the liquidity and deposits.
Okay, sir, understood. So within the retail segment, where exactly are you going to be seeing higher demand panning out for you in FY25, sir?
Our focus will be majority on the commercial segment. So if you
Okay.
can look at it, it is 21% growth, 34% overall composition because there's a high yielding segment for us and we have a presence in many other areas and people trust us. We did internally many things for the product, processes and people. And with these things, the TAT has improved. That is the reason on a year on year, if I look at it, the disbursements are going up by 25 to 30%. Next comes the retail personal segment where mortgages will focus on that. This year also, if you can look at it, our LAP has gone up by 27%. Home loans have gone up. Next priority comes the jewel loans, and that to some extent we will focus on the education loans. And agriculture, anyhow, it continues because we need to meet the PSL target. And under that, majority around 80-85% comes under the jewel loans, and rest will come from the MFI as well as the other direct agree like poultry, dairy, these sort of things. So these three areas would be the focus area for the bank. As far as corporate is concerned, it doesn't mean saying that we will not give focus on that. We will granularize the portfolio and we will focus for less than 75 crore accounts.
Okay, understood, sir. So, as far as you did talk about several segments of your loans in terms of retail, but gold loan is something that I wanted to ask a little bit, sir, because this is now emerging as a major concern even for the RBI. And we at Business Today, we've come out with a series of articles even on our magazine as well. We've gone in depth to really understand the kind of gold loan boom that there has been concern. But on the other hand, RBI has raised some concerns with respect to the cash loans that are being loaned out that has to be maintained within the norm as well. There are several other issues that perhaps came into fore, that whether the key weightage and the kind of those things were taken into consideration or not. How exactly are you positioned on gold loans,
I,
sir?
I,
Where
I
do you see?
appreciate your concern and RBI's concern also. That is the reason they are mindful of the fact that this can come up an issue. Many of the above 15 lakhs loans, what all are there under jewel loan, progressively we have brought them down during last 6 months because we may take a bigger hit there. That's the first thing. And second thing, what we did is we have brought down our loan to value, that is the loan amount to the value of the gold, which used to be around 70, 75, 80 and all. So we have brought it down to 67%. Even if there is a crash in the jewel price, so we will be sufficiently insulated because we have a margin of around 33% that way. So continuously we are monitoring our LTV area where we'll have to focus to take care of any sort of a correction in the gold prices. So that way we want to sufficiently insulate ourselves. And third point is we are not aggressively growing in the jewel loan. If you can look at our last 3-4 years, the composition of the jewel loan out of the total portfolio, it is still 25%. So though we initially planned for growing up to 30%, so we still maintained at 25%, though the scope available is much more. We are going in a graduated and in a relatively covered model.
Okay, understood that, sir. So, and on the asset quality front, of course, there is a moderation. You also said multi-quarter low is what you are at in terms of GNP and net NPA as well. Are there any further levers for you to further bring it down in FY25, sir?
Then a good point you asked. If you look at it, we were having a gross NPA of 9% odd at a point of time. We brought it down to 1.4. Our net NPA is one of the lowest at 0.4. This has come up on account of two reasons. One thing is last year 1.5 years back, we started a collections vertical wherein a feet on street or their call center, all we have activated. And above all our branches have been activated to take care of the quality of the portfolio. That is the reason, if you can look at it, in the industry, ours is one of the lowest as far as the DPD is concerned. On a 74,500 crores of advances book, our DPD 30 plus, which can slip into NPA, is less than 300 crore. So at the most, the quarter, if you can look at it, 300 crore can become, and ideally nothing will become, a majority will not become out of that. So we have sufficiently insulated rather than focusing on recovery. We thought that pre-recovery, if we take an efforts properly, we can avoid this sort of a situation. So that way, we feel every vertical more or less, we have brought down the SMA 30 plus. Having come to this stage, we are now focusing on the SMA 0 front. If we can reduce the flow there, automatically 30 plus will be coming down. So that way, there are no major concerns as far as we think. We look at the portfolio. As I was mentioning, 200 crores of corporate, which are weaker. Consciously, we have shut out during this year. Otherwise, it can become an NPA in 1 or 2 years. All these precautions are being taken to take care of the asset quality.
Okay, sir. Well, thank you so much, sir, for sharing all these wonderful insights with all our viewers. Truly appreciate your time with us. And all the very best for the upcoming quarter, sir. Hoping to see you very soon again to discuss more understanding about the industry trends, sir. Thank you so much.
Thank you very much. Thank you very much. Bye. Thank you.
All right. With that, viewers, we wrap up this very special conversation with Karur Vysya Bank on the earnings as well as the outlook going forward from here. Do stay tuned on to Business Today as we continue to get you more insights from the world of business and finance. That continues on your screens. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition, and our focus on this special edition is on the company which has given its investors an over 500 times return over the last 4 years. This is a company which is in the solar place as far as solar segment is concerned. A mind-boggling 50,000% kind of a return over the last 4 years, and the company has gone through a split as well, and it's been continuously performing very well on the earnings front. The company I'm talking about is Waaree Renewable Technologies, which is now posted in Q4 a four-fold jump in the consolidated net profit after tax, which has now come in at 54 crore rupees for this March quarter. And this is also on the back of higher revenues. We've seen for the quarter under review, the total revenues have also surged to 273.2 crores, and that's also a substantial jump from about 61.5 crore rupees that were reported in the year ago period as well. EBITDA has also stood at 75 odd crore rupees, again a substantial jump from 22.3 odd crore rupees as well. Now joining in to detail for us what really went in the performance of this quarter and what does the outlook really look forward from here, I am now joined by a very special person. Mr. Dilip Panchwani, the CFO of Waaree Renewables Technologies, is with us. Warm welcome to you, sir, on Business Today. It's great to have you with us, and many congratulations for another stellar set of earnings that have come from your end as well. Do tell our viewers what has led to this stellar performance this time.
Good morning and thank you, Sakshi. One good thing that has happened with us is our execution. We have done 3 times more execution than what we did last year. We were just below 300 megawatt and we have accomplished 700 megawatt. So that's what has achieved these results